Hello everyone. Hi, I am Ravi Handa, founder of the website handakafanda.com. Welcome to another Factopedia, and this one is on GST, or the Goods and Services Tax. Now, as you might know, these videos are included as a part of our GK course, which essentially helps you prepare for the GK section of IIFt, ZAT and SNAP. You should check that out. Now today, in this particular Factopedia video, we are going to talk about the GST. This is something which is very much in the news, and this is also something on which a question will be asked. I'm pretty sure there might be multiple questions on it in ZAT, SNAP and IIFT, but at least one of them will have some sort of a question on it. Also, this can help you prepare for the GDPI part of the entrance exams. Now, let's have a look. First of all, what exactly is the GST? GST stands for the Goods and Services Tax Bill, which is the 122nd amendment to the Constitution. Now, it's a central GST and a state GST. So there will be two kinds of taxes which will be a part of it, one for the center and one for the state. It is a tax which is only on value addition. So this is the important part, that it will only be on the value addition part of it. It will not be on the complete value. What exactly does that mean? We will discuss it in the coming slides. Now, when did it start? When did the whole story begin? So the entire story was started by actually Yashwant Sinha way back in the year 2000, when he introduced the Financial Regulation and Fiscal Regulation and the Budget Management Bill. Once again, Fiscal Regulation and the Budget Management Bill, which was introduced in the year 2000 by the then Finance Minister Yashwant Sinha. It became an act in 2003 when it was passed by the Parliament, and then came the Kelkar Task Force, which was headed by the chairman, Mr. Vijay Kelkar, coincidentally a pass out of COEP Pune. I've been there, it's a very nice college. So what the Kelkar Task Force did way back in 2003, that's 13 years ago, was they gave the concept that there should be something like the GST, which was then proposed in the parliament as a part of the budget speech by P Chidambram in 2006. They wanted to implement it by 2010, but then the crash happened in 2007, 2008. The markets were in a disarray and people believed that this might lead to further problems. And then there was a whole on-off thing between BJP wanting to do it, not wanting to do it, some states wanting it, some states not wanting it, and stuff like that. But eventually, on 19th of December 2014, Arun Jaitley presented the bill in the parliament. And yesterday, I'm making this video on the 4th of August. So on 3rd of August 2016, the GST bill was finally passed by the parliament. Now let's spend some time to understand what exactly the GST bill does. But before that, we need to have at least a basic knowledge of how taxes in India work. Now there are two kinds of taxes, the direct taxes and the indirect taxes. What are the direct taxes? The income tax, which actually goes to the center. So let's say whatever amount of money you're making, the government taxes that particular income and it goes to the center. There is a wealth tax. Now, let's say you have multiple properties which you are not renting out and you're not making any money from them. So this is just a property which is lying, or you have large amounts of gold. Then there is a wealth tax also which goes to the center. Essentially, the direct taxes are always levied on a person. It is based on a person, on how much money he makes, which is his income, or how rich he is. It is not based on consumption. What is based on consumption is the indirect taxes. So what I'm trying to say is, so suppose you make 20 lakh rupees a year and I make 5 lakh rupees a year, then the amount of tax which would be levied on both of us would be different, because we are different individuals, we have different incomes, we have different wealth, and that is why it's called a direct tax. But on the other hand, the indirect taxes, such as the service tax, which goes to the center, the value-added tax, which goes to the state, and there are a bunch of other taxes. I recently found out there is something called a luxury tax also, which is levied by some states. For example, in Goa, depending upon the kind of hotel you stay in, the amount of service, the luxury tax will be decided. So let's say if your room is under 500 rupees a day, then there is not going to be any sort of a luxury tax. But let's say if you are staying in a room which costs more than 5,000 rupees a day, then there will be a luxury tax which would be levied. The percentages are different. I'm not going to get into too much details. But what you need to understand is that this tax is levied on goods and services, which means that if both of us are going to buy a t-shirt which costs 500 rupees, then both of us have paid the same amount of tax on it. It is not that because I am rich, I have paid a higher amount of tax, or it is not because you are poor, you would have paid a different amount of tax. The tax difference between the two of us would be in case of direct taxes. In indirect taxes, both of us are paying the same amount of tax. Now, why is this a problem, or what's the issue here? Well, the issue here is that the amount of the taxes which are dependent on states, they vary from a state to state. So when you are transferring goods from one state to another state, then there can be multiple taxation. There are a bunch of other issues which come into the picture because different states apply different amount of taxes. That's probably the reason why a bottle of beer costs something like 120 rupees, or Budweiser specifically costs around 125, 135 rupees in Pune, whereas it costs something like 95 or 105 rupees in Delhi, where it's lower. And Goa, well, let's just not talk about how much beer costs in Goa. That's a sad thing for people who are not living in Goa. So these are the problems which are there. And GST, it will solve it. So let's have a look at how the GST would work when it is applied in the same state. So first of all, imagine that you have a raw material which costs 100 rupees. Then 10 rupees, if this is the tax rate, 10 rupees go to the state and 10 rupees go to the center, which means 120 rupees will be the cost that the manufacturer is paying to the person who is giving him the raw material. So here we will try to understand the concept of tax on value addition. That is the first thing that I am talking about. Now, the manufacturer is paying 240 rupees, or he's charging 240 rupees. He says that my goods are 200 rupees. 20 rupees need to go to the state and 20 rupees need to go to the center. I have assumed a flat tax rate of 10% for everything. So now what is happening is, earlier what used to happen was that the manufacturer will have to pay 20 rupees to state and will have to pay 20 rupees to center. But now he will actually end up paying only 10 rupees. Why? Because 10 rupees are already paid. Please understand, this is the key difference in the GST, the value addition part. So once again, manufacturer is supposed to pay 20 rupees to the state, but he says that the goods that I got, when I got the goods at 120 rupees, 10 rupees was already paid to the state. So it is like saying that the state should get 20 rupees in taxes. 10 the state has got from the guy who sold the raw material. 10 he has got from the manufacturer. So the actual payment made to the state will be the only additional 10 rupees, the value addition this has happened. Let's take it to a level further. The manufacturer has given the goods to the retailer at 240 rupees. Now, the retailer will charge 360 rupees from the end user, 300 rupees for himself, 30 rupees for the state, and 30 rupees for the center. But when he actually makes the payment to the state, what he is going to say is that I've already paid you 20 rupees. How have I already paid you 20 rupees? Well, I might not have paid you 20 rupees, but the manufacturer has paid you 10 rupees. The raw material guy has paid you 10 rupees. So the state, which needs 30 rupees on this particular good, 10 have come from the raw material when the raw material was sold, 10 have come when the manufacturer sold in 240 rupees to the retailer, and 10 rupees will come now when the retailer sends it to the consumer. So the state has got his 30 rupees, the center has got his 30 rupees, the actual payment made by the consumer is 360 rupees, but the state has got it in three parts. 10 rupees when the raw material was sold, 10 rupees when the transaction between the manufacturer and the retailer happened, and 10 rupees when the transaction between the retailer and the consumer happened. This is happening only when this entire transaction is happening in the same state. Will the things be different when they are happening in different states? Yes. Let's see how. So raw material is being done in X, manufacturer is in X, retailer is in Y, and the retailer is selling to the consumer. Now have a look at the numbers. The numbers are exactly the same. The state still needs to get 360 rupees. In 360 rupees, 30 rupees need to go to state. But to which state? Earlier, the problem was, let's say if the manufacturer was in state X and the retailer was in state Y, then when the goods crossed the border, they needed to pay some sort of an entry tax, an octroi tax. There were various state taxes which came into the picture. Once the GST is implemented, all these inter-border trades will be really, really simple. It is one country, one India, one tax, and that will be a huge boost to the economy. At least it's perceived to be a huge boost to the economy. And how will the states then share the taxes? The 30 rupees that need to go to the state. So the manufacturer is selling to the retailer in 240 rupees. So then the state X will get its 10 rupees from here. But the retailer is in state Y. It is selling to consumer in state Y. So the 30 rupees which needed to go to state, out of that 20 have already been paid. The last 10 rupees for the transaction which is happening in state Y, those will go to state Y. So state X is also happy that it has got its 20 rupees. State Y is also happy that it has got its 10 rupees. And overall, the consumer does not need to pay extra. He does not need to pay a tax on tax like he used to pay earlier, which is known as the cascading effect of taxes. So what used to happen was, when there was inter-border trade between X and Y, then there were some extra charges or taxes which were levied, such as entry tax, which was on the value of 240 rupees, which was a tax on tax, which at the end of the day increased the cost for the consumer. That will no longer happen once the GST is introduced. What exactly will the GST do? India will be treated as a single market, so the interstate trade will be really simple. This will reduce the unhealthy competition which actually exists between states, that okay, come, you set up factories here, there is more consumption here, and you will have to pay lesser in taxes and stuff like that. Consumers will know how much they are paying. This is a very, very important thing. See, right now, if I'm buying a t-shirt for 500 rupees, I don't even know what is the amount of tax. Yes, sometimes when the retailer makes a bill, he adds a VAT amount and I know that is the VAT amount. But how much excise duty I have paid on it or various other stuff. How this will have an impact is that, let's say that the government decides that the GST rate is 12%. Now, when the government increases the GST rate from 12% to 13% for whatever reason, there is bound to be a backlash. Because everyone knows that what is the GST rate and how it will impact, and everything will be costlier and stuff like that. Right now, if the government even changes the excise duty, we don't even realize, because we don't even know what is the excise duty. We don't even know what is the excise duty on commodity X versus commodity Y, which states has higher taxes. All people like us know is in the goods that we are interested in. Say, for example, I'm selling online courses for GK, which comes under the purview of service tax. So I know what the service tax rate is, what I'm supposed to pay. I'm a consumer of beer, so what I know is that the beer is a lot cheaper in Goa. It's really, really costly in Maharashtra because of the taxes. But about other goods, I'm not really aware. Having the GST, having one single rate will make the consumers a lot more aware, which is a good thing. And consumers will not have to pay tax on tax, the cascading effect of taxes, which I talked about when there is interstate trade. Another thing which the GST will supposedly do is, now every transaction will be taxed at each and every step. So a lot of people who were evading taxes will not be able to evade it anymore. And that will essentially increase the tax base. Currently, the idea is that 18% cap will be imposed on the GST, that you cannot charge more than 18% for the GST. This is something that the Congress is lobbying for, that you put it in the bill, you put it in the constitution that you cannot charge more than 18%. The impact, as I was saying, will be that 1 to 2% would be added to the GDP, and also things will become cheaper for the consumer, and that is the hope that is there from GST. That is what the GST will do. Couple of quick things which you might need from an exam perspective. What central taxes are going to be absorbed under the GST? The central excise duty will be a part of the GST. The additional excise duty will be a part of the GST. The additional duties of custom, please don't ask me what they are. I don't know. I just got these names from the Government of India website. The countervailing duty will be a part of the GST. The SAD of customs, well, that is what it is officially called. I'm not joking here. The special additional duty of customs, that will be a part of the GST. And the service tax will also be a part of the GST. So these are all the things of the part of the central taxes which are going to be included in the GST. So as you can see, it is bound to make things simpler for everyone to do business if there is just one tax that everyone has to deal with. Very similarly, the state taxes which will now be a part of the GST, the state VAT, the value added tax which is levied by the state, the central state tax which used to go to the state, purchase tax, luxury tax, yes, there is something called the luxury tax, the entry tax, the octroi in all forms, entertainment tax, which is not levied by the local bodies, that's what the definition is, will be now included in the GST. The purchase tax will be included in the GST. The taxes on lotteries, betting, gambling, that will be included as a part of the GST. So these are all the things which are going to go under the GST banner. Please be comfortable with these names, because most probably the kind of question that you are going to get is, okay, which of these will now be a part of the GST? 4 of these would be mentioned, maybe some extra thing is mentioned, and you will have to say ABC, ABCD or something like that. One more thing, very important, what will the GST not include? Now this is something which is not getting talked about as much. Probably it deserves a little more attention, which is alcohol is not going to be a part of the GST. So the beer will still remain to be a lot more costlier in Maharashtra compared to Goa. Electricity is not going to be a part of the GST. Petrol is not going to be a part of the GST. The stamp duty is not going to be part of the GST. Stamp duty is something that you pay when you buy or sell land. Actually, there is going to be a committee which will actually decide on the modalities of this, but it is broadly assumed, there is more or less a consensus on this, that these things are not going to be included in the GST. Thanks a lot for watching this video. I hope you learned something about the GST and you will be able to answer questions on it. We have many more videos as a part of a GK course on handakafunda.com. Do check that course out. I'm sure it will help you in your XAT, IIFt, SNAP and other MBA entrance exam preparations. Thank you. Thanks a lot.